Welcome to IC 105 Accounting Principles 2. Basically, this is a subject that will tackle partnership and corporation accounting. So, first of all, partnership, basic concepts and considerations. After the end of this part 1 lesson, you will be able to relate the concept of partnership in real setting, understand the definition of partnership, its characteristics, classifications, and kinds of partners, and also explain the advantages and disadvantages of partnership and distinguish the differences between a partnership, a sole proprietorship, and a corporation. And of course, we will be discussing about articles of partnership and the other legal concerns in partnership. So, first and foremost, let us define what partnership is. According to Civil Code of the Philippines, Article 1767, it is a juridical personality with two or more persons who bind themselves to contribute money, property, or industry to a common fund, with the intention of dividing the profit among themselves. So basically, with partnership, there must be a contribution. It could be in the form of money, a property, or industry towards a common fund. So these are the basic characteristics of a partnership. First is mutual contribution. So when we say mutual contribution, there cannot be a partnership without contribution of money, property, or industry to a common fund. So you will not be able to say that it is a partnership if the partners did not contribute any of these. It could be in the form of money, property, or industry. Number two is the division of profits or the losses. The essence of partnership is that each partner must share in the profits or losses of the venture. Third is co ownership of contributed assets. It means that all assets contributed into the partnership are owned by the partnership by virtue of its separate and distinct juridical personality. If one partner contributes an asset to the business and all partners jointly own it in a special sense. Another is mutual agency. So any partner can bind the other partners to a contract if he is acting within his express or implied authority. Another is limited life. So a partnership has a limited life. It may be dissolved by the admission, death, insolvency, and incapacity, or even withdrawal of a partner or expiration of the term specified in the partnership agreement. Next is unlimited liability. So all partners in a partnership, except the limited partners, including the industrial partners, they are personally liable for all the debts incurred by the partnership. So if the partnership cannot settle its obligations, the creditors will be able to claim. So the claims of the creditors will be satisfied first from the personal assets of the partners without prejudice to the rights of the separate creditors of the partners. Now let's go to income taxes. So partnerships exempt for general professional partnerships. They are subject to tax rate of 30% of their taxable income. And partners' equity accounts. So, accounting for partnerships are much like accounting for sole proprietorships. The difference lies in the number of partners' equity accounts. So, each partner has a capital account and a withdrawal account that serves similar functions as related to the accounts in sole proprietorships. Now, let's move on to the classifications of partnership. First is according to object. Second is according to liability. Third is according to duration. Fourth is according to purpose. Fifth is according to legality of existence. Now let us tackle each of these classifications. So, according to object, there is what we call the universal partnership. Universal partnership of all present property. So all contributions are now part of the partnership fund. So they are no longer the personal asset or property of the owner or one of the partners, but it now becomes the property of the partnership. Universal partnership of profits. So, all that the partners may acquire by their industry or work during the existence of the partnership and the use of whatever the partners contributed at the time of the institution of the contract belong now to the partnership. Next is particular partnership. So, the object of the partnership is determinate. It means that its use or fruit, specific undertaking, or the exercise of a profession or vocation. That is why professional people can also form a partnership as they will engage in rendering their service. For example, lawyers, doctors, or even teachers. Now, according to liability, general partnership, it means that all partners are liable to the extent of their separate properties. Then limited partnership, the limited partners are liable only to the extent of their personal contributions. So in a limited partnership, the law states that there shall be at least one general partner. According to duration, partnership with a fixed term or for a particular undertaking, and partnership at will, one in which no term is specified and is not formed for any particular undertaking. There's also a classification according to purpose. So your partnership can be commercial or trading partnership engaged in just like buying and selling of goods. And also it can also be in the form of professional. So as I've mentioned, professional or non-trading partnership can also be possible in terms of professional people who would like to engage in rendering service to their clients. Now, the fifth one is to the legality of existence. So there is what we call the de jure partnership or de jure partnership and the de facto partnership. Now, let's move on to the advantages and the disadvantages of a partnership. Let's tackle first the advantages as we compare it with the proprietorship, the sole proprietorship, and also from the corporation. So it brings greater financial capability to the business, of course, because when we have a partnership, there will be a bigger capital compared to a sole proprietorship because there will be a lot more people who will be engaging into the business. And then a combination of also of the special skills, the expertise, and the experience of the partners. And also, as they offer relative freedom and flexibility of action in decision making. And comparing it with corporation, it is a lot easier and less expensive, less complicated to organize, and it is more personal and informal. While we also have the disadvantages, it can easily be dissolved. It's because it is unstable compared to a corporation because every time that a partner may undergo a death of a partner or even with a withdrawal or somebody would like to be eliminated from the partnership because he or she doesn't want anymore to be part of it, then totally the partnership will be dissolved. And another disadvantage that we have is mutual agency and unlimited liability may create personal obligations to partners, of course. And thus, it would be less effective compared to a corporation in raising large amounts of capital. One. Now, let us differentiate partnership as we distinguish it from corporations. So, we have this the category, the manner of creation, number of persons, commencement of juridical personality, management, extent of liability, the right of succession, and the terms of existence. So, with partnership, it is by mere agreement. It is created by mere agreement, while with corporation, it is with corporation of operation of law. So partnership, you can form it even with just two people, two or more persons, while corporation, it could be 5 to 15 incorporators, persons who would start the corporation. And the partnership commence from the execution of the articles. While for the corporation, it should be the issuance of the certificate itself of the incorporation by the Securities and Exchange Commission or SEC. And then with partnership, every partner is an agent. Therefore, he is a co manager in managing the partnership itself, if in case the partners did not appoint a managing partner. While with corporation, the management itself is vested on the board of directors or the trustees, the BOD or the BOT. And in terms of the liability, partnership liable up to their personal assets except for the limited partners. While the corporation, they're liable only up to their interest or the investment that they have contributed to the corporation. As to the right of succession, there is no right of succession in the partnership because, as I have mentioned a while ago, once somebody would like to retire or withdraw from the partnership, then the partnership itself is now dissolved and they have to begin for another one if they would like to continue. While with corporation, it has a right of succession. It means it has the capacity of continued existence regardless of the death or withdrawal, insolvency, or incapacity of one of their directors or their shareholders or stockholders. And in terms of existence, partnership, any period stipulated by the partners. But with corporation, it is not to exceed 50 years, but it is subject for extension. Now, this is an example of an articles of partnership. Okay, so these are the contents. So partnerships are required to be registered with the SEC. It is done by filing the articles of partnership and it is set forth containing all the terms and conditions mutually agreed by the partners themselves. So specifically, the documents required are proposed articles of partnership, the name verification slip, the bank certificate of deposit, alien certificate of registration if in case that one of the partners is a foreigner, and also the proof of inward remittance in case of non-resident aliens. And it bears noting that corporations are not allowed by law to become partners in a partnership. So these are some important issues included in the written partnership contract. First, of course, is the partnership's nature and rationale. So it will talk about what is the nature of your business. So we have the partner's capital contribution. It would also state on how much of the contribution is being given by each partner in the partnership, of course. And of course, the number three is allocation with regards to profits or losses. So there must be a clear agreement about this. And also the authority given for each partner. So we have to determine the partners who will have the task of regularly running the partnership. And the fifth one is the guidelines in admitting new partners, if in case they will be accepting new co-owners in the partnership or new partners. And of course, the provision on what to do in case one of the partner dies. One of the partners would die or maybe withdraw from the company. So what's going to happen? And buying one of the partner's share, and also the signature authority to be used in the partnership's bank account. So they have to determine whose signature it would be among the partners that will be used, of course, in the bank accounts. And the ways and means of resolving conflict if there are misunderstandings in the partnership and business. For your activity questions, number one, what do you understand about mutual contribution and how important it is to contribute something in the partnership? And number two, if you are going to enter into a partnership with your close friends in order to build a business, then how will you divide the profits or losses? So you can direct message your answer on FB Messenger with your name and section. Thank you for listening to our part one of our lesson.